Hi, I'm Henry Chu from PIMCO. As global bond yields sink to record lows, many investors are looking to invest into the high-yield asset class. So what role does high-yield bonds play in a portfolio, and why should investors invest into high-yield bonds? Joining me today is Stephen Chang, Portfolio Manager for Asia Portfolios. Stephen, thank you very much for joining us today.
Glad to be here.
Stephen, let's start by talking about Asia high yield as an asset class. Why should investors pay attention to it?
Asia high yield is a growing asset class that benefits from strong in-region demand. The market has grown rapidly to over $220 billion in size, almost 4 times larger than in a decade ago. In general, the Asia high yield space is interesting because it offers higher yield and return potential than other global markets. It is also worthwhile to note that the Asia high yield market has higher average credit quality ratings than other global high yield markets. In terms of historical risk-adjusted returns, if you look at the 5-year annualized numbers, Asia high yield had delivered more favorable results compared to global high yield and broad emerging markets. Another perk of investing in Asia high yield versus the other counterparts is the high in-region ownership, which makes Asia less dependent on dollar liquidity compared to other emerging market regions.
So a growing asset class that offers attractive risk-adjusted return potential. So Stephen, what has been the drivers for Asia high yield, and what are the tailwinds for the asset class going forward?
First is the attractive relative value. In spite of the recent spread compression, given a strong bid from investor for yield, valuation for Asia high yield compared to US high yield offers 200 basis points of spread premium while maintaining 1 to 2 notches higher credit quality. Second, we have seen improving technicals for this asset class. The new issuance market has been robust, with most deals being well absorbed by the market. We expect the net supply to moderate with lower net financing needs and higher maturities. We have also seen stronger signs of demand as fund flows have turned positive year-to-date after a challenging 2018. Thirdly, in terms of fundamentals, while we see downside risk to economic growth for the region, with the trade war between China and US further escalated, the good news is monetary policy across both the US and Asia has turned more dovish while inflation remains subdued. This should provide support to the market outlook.
Great point, Stephen. To wrap up the discussion, can you advise the investors who are looking into the asset class, what are the associated risks? What should investors be thinking about when deciding to invest in Asia high yield?
This may sound obvious, but I think it's worthwhile to point out that high yield bonds are in general economically sensitive and have a higher correlation with the equity market compared to core bonds or higher quality bonds. It is also important for investors to understand that there are substantial differences across the broader Asia credit universe, with over 500 benchmark issuers across multiple sectors in 17 countries. Thus, taking an active approach across the rating spectrum and making careful credit selection is particularly crucial to capitalize amid bouts of volatility and to identify mispriced opportunities in the Asia high yield landscape.